look at the return of zero down mortgages, appealing to first-time home buyers who may be struggling with that initial hefty down payment, especially in the face of higher interest rates. But financial experts warn you need to be aware of the risks.
You heard that right. Zero down mortgages are making a comeback, and many experts are fearing that this could lead to the next 2008 financial crisis and bring in a wave of foreclosures. While this loan option may seem like a big life raft for many home buyers who were struggling to save for a down payment, experts are fearing that this could lead to a major financial crisis and bring on foreclosures. I'm going to explain to you in this video today what today's zero down payment mortgage looks like, why the experts are concerned about it, and I'm also going to share with you some other options that you should consider if you're not comfortable with taking on this type of a loan. So let's get started. So zero down mortgages, it sounds awesome, right? So you don't have to put any money down. Well, with this new product, don't get excited. There's a catch to it. United Wholesale Mortgage just came out with this new product. This is zero down payment mortgage. But what it is that they're offering qualified buyers down payment assistance. And that's to the tune of $15,000 or 3%. So yes, it's actually a second loan on top of the mortgage that you're taking out. Now, this second loan of $15,000 is interest-free and there's no monthly payments. So you don't have to make a monthly payment along with your mortgage payment. You can hold off on paying that loan off, which is great, right? It provides some flexibility to homeowners, and that's all well and good. But experts are fearing that this could lead to potential problems. In order to qualify for this loan, borrowers must be at or below 80% of the area median income of where the home is located that they're going to buy. And you also need to be a first-time home buyer, or one of the borrowers needs to be a first-time home buyer. Those are the requirements. Now, even though it's offering flexibility in the repayment of the second loan, you do still have to pay that loan off, and it has to be paid off either at the end of the mortgage, at the end of the 30 years, when you refinance the loan, or if you sell the home. That second loan has to be paid off. United Wholesale Mortgage's chief executive, Matt Ishbia, feels that he's claiming that this will remove that barrier of people having to come up with that down payment that people are just struggling to afford. I appreciate his sentiment, and it's all well and good intentions, but there's a lot of experts that aren't agreeing with this program, and they're fearing that this is looking like 2006 or 2008 in the subprime mortgage days. For example, Patricia McCoy, she's a professor of law at Boston College Law School. She's saying this has a subprime mortgage crisis written all over it. And why does she say that? Well, here's why. The biggest concern with this is that when you have a zero down payment mortgage, you're starting off with zero equity in the home. You have not put any of your own money as to down payment. You haven't put any of your own money at all into the home. So say the prices start to come down, and we are starting to see prices soften in many markets across the country. And if those prices come down quite a bit, then you're actually owing more on your mortgage than what your home is worth. This is probably the biggest concern that they're worried about, is that you're going to be underwater in your mortgage. And they're going back to what happened in the great financial crisis. People were defaulting on their payments, therefore leading to foreclosures. The other problem that they're concerned with is the repayment on this second loan. So as I said before, you have to pay it off at the end of the 30-year term, refinance, or when you sell your home. Say if somebody runs into a situation, they've only been in the home, say a couple of years, and they suddenly need to sell the home and they didn't pay off that second mortgage, what's going to happen? They're going to default on that. So say if the home didn't really gain any value in that 2 years and you're really not going to be making any money off of that, and you didn't pay off or start paying that loan off, that second loan, you got to come up with that $15,000 to pay off that second loan. So that's the other concern that they have with this, that this could potentially become a big problem. Now, keep in mind that second loan is a balloon payment. So if you decided to hold off on paying that loan, you didn't want to pay it back, when you go to sell, or especially when you go to refinance, you got to come up with that $15,000 to pay off that second loan. And if you don't, you're in trouble. So there is a problem there with that. And it's kind of limiting people, right? So even if the rates come back down, you want to refinance, you want to have that $15,000 to be able to pay off that second loan. And if you don't, you're kind of tied to sticking with the current rate. You're not going to be able to refinance because you can't pay off that second loan. So there are some challenges that are presented here, but is it going to be the same as the subprime crisis? I understand the concerns that this could turn into another 2008 with the subprime crisis, but let's let's take a step back. And I've talked about this before. The subprime mortgages back in the day in 2006 through 2008, those loans were given to anybody who had a pulse, basically. Those are given to people who had poor credit. They were predatory lending practices that took place that should not have happened. And since then, there have been major regulations that have been put in place to prevent that from happening again. And United Wholesale Mortgage is actually claiming that this will not be a subprime crisis because they do have all these tight regulations and lending practices that it's going to be hard to give anybody, just anybody, this type of loan. There are requirements that are going to be followed. They need to meet those requirements in order to get the loan. I just wanted to take a quick second to let you know that if you are in need of a real estate agent in your part of the country and you can't find one, click the link down below in the description box, fill out the form, and I will get back to you within 24 hours. I'm connected to tons of agents around this country, and I would be happy to help get you connected to one in your market. The biggest thing that borrowers need to understand about this loan, should you consider taking this on, is you need to understand that whole balloon payment, as I just mentioned. So if you find yourself in a situation, you're going to have to sell the home, you got to pay that whole thing off. And if you don't make enough money on the sale to pay off that additional $15,000, that's where you're going to fall into trouble. So always read the fine print, get all the information you can from your lender, because that could lead to major problems if you don't understand the exact terms of this loan. So again, do I think this is going to lead into a foreclosure wave? I don't think so, but look, one never knows, right? These experts know more than I do, honestly. So it could potentially happen. But again, you have a couple of things different from 2008 is that, again, tighter regulations, tighter lending practices. Again, you have to really qualify to get these loans. It's not like they're just giving it out to anybody. Now, I want to touch on some other options that you can consider if you don't have much for a down payment or don't have a down payment at all. There are other options that you can consider. Now, there's the VA loan, which is given to veterans and military members. And with those loans, you don't have to put any money down. You can, but you do have that option of a zero down payment. The other plus to the VA loan is that they don't charge a PMI, whereas this other one with United Wholesale Mortgage, you are going to have to pay a PMI on those monthly payments. VA loan, if you're a military veteran, you don't pay a PMI, which is really awesome. Another option is the USDA loan. Again, you don't have to put any money down, no PMI. The only thing is that you have to meet certain requirements as far as your level of income. You need to be purchasing a property in a rural area. So talk to lenders about these options and see if either one of these would fit your needs. Another thing I want to talk about is state down payment assistance programs. Every state offers a first-time home buyer down payment assistance program. So for example, here in New Jersey, we have a down payment assistance program. So if you qualify, you can get $15,000 towards your down payment, and you can also get an additional $7,000 towards your closing costs. So that's a total of $22,000. And it's a 5-year forgivable loan. You need to just live in your house for 5 years and that loan's forgivable. You don't have to pay that back, which is pretty awesome. So if you're a first-time home buyer and you're struggling, look into your state's programs to see what kind of down payment assistance programs they offer. Lenders and banks are aware of the different states' down payment assistance programs. So speak with one of those to get all the details about that, learn what you need to do in order to qualify for those programs. Because personally, if you're a first-time home buyer and you're struggling, I think that would be my first option to go to, is look at one of these state programs to take advantage of that. In most cases, in most states like here in New Jersey, as long as you live in that house for 5 years, you don't have to pay it back, which I think that's amazing. So really consider that. Do your research on that one. Hey, did you know that HOAs can actually foreclose on your home? Yeah, they can. Do you want to learn about that? You got to watch this video right here. Thank you so much for watching me today to get your dose of real estate reality. My name is Jackie Baker, and I will see you next time.